Today, I think Bitcoin is 2 trillion, and we're like, well, could it get to also 4 or 5 trillion? And I wake up every day at 3 in the morning, and I'm like, why am I such an idiot not being involved in it? And it just goes up and up.
Imagine a financial revolution happening right under your nose. Billionaires losing sleep, governments watching nervously, and the entire world on the edge of a new economic era. Bitcoin, once dismissed as a fringe experiment, has now become a powerhouse threatening the very foundations of traditional wealth. Today, we're uncovering why the ultra-rich are panicking, what this means for the future of money, and how Bitcoin is reshaping the game in ways you've never seen before. Get ready, this is the story that could change everything. The quiet revolution in US mortgage lending. Imagine a future where you no longer need to liquidate your Bitcoin holdings to buy a house. That future is quickly becoming a reality. Recently, a groundbreaking announcement by the U.S. Federal Housing Finance Agency, FHFA, signaled an imminent shift in how cryptocurrencies, especially Bitcoin, are perceived within the American financial infrastructure. In a statement that flew largely under the radar, FHFA Director William Dorflinger declared, "After significant study, and in keeping with President Trump's vision to make the United States the crypto capital of the world, I have directed Fannie Mae and Freddie Mac to prepare their systems to consider cryptocurrency assets as collateral for mortgages." This seemingly technical pronouncement carries enormous weight. It indicates that Bitcoin is no longer just an asset for speculation, but is stepping into the realm of mainstream financial legitimacy, from speculation to institutional acceptance. For years, Bitcoin has been viewed primarily as a speculative asset, a digital gold that attracts retail traders and a handful of institutional investors seeking diversification. However, this recent move signifies a paradigm shift. Bitcoin is being acknowledged as a credible collateral asset, one that can underpin mortgage lending and, by extension, the broader credit ecosystem. This development could be more transformative than recent exchange-traded fund ETF approvals, which primarily increased retail exposure. Recognizing Bitcoin as an acceptable collateral for mortgages means it's entering the foundational credit and securitization markets, potentially paving the way for Bitcoin-backed mortgage loans, mortgage-backed securities incorporating Bitcoin, and even banks offering Bitcoin collateralized loans at competitive rates. Given that the U.S. mortgage market exceeds $13 trillion, with Fannie Mae and Freddie Mac holding over 60% of U.S. residential mortgages, the implications are profound. When these giants start to embrace Bitcoin, it signals a seismic shift, embedding the cryptocurrency deeper into the fabric of American finance. Ripple effects, a new financial ecosystem in formation. This integration of Bitcoin into core credit markets could trigger a cascade of changes across the financial landscape. Mortgage-backed securities with Bitcoin exposure. Just as traditional mortgage-backed securities, MBS, fueled the 2008 financial crisis, future MBS could include Bitcoin assets, diversifying and potentially stabilizing the securities. Lower rate, Bitcoin-backed loans. Financial institutions might begin offering loans collateralized by Bitcoin, providing borrowers with liquidity without selling their holdings, an attractive option for long-term holders. Sovereign and corporate bonds. Incorporating Bitcoin, governments and corporations could issue bonds with Bitcoin as part of their reserve or collateral backing, serving as an inflation hedge and diversifying risk. These changes not only legitimize Bitcoin further, but could catalyze a new wave of adoption across traditional sectors, pushing its price higher and embedding it into everyday financial decisions. A quiet but powerful shift, institutional awareness and FOMO. Despite Bitcoin's current consolidation just above $100,000, behind the scenes, a quiet revolution is taking place. Institutional acceptance is gathering momentum. Large players are quietly positioning themselves for the next big move. Meanwhile, some of the world's wealthiest individuals are losing sleep over what they perceive as missed opportunities. Take Philip Lafont, a billionaire tech investor who recently voiced his regrets on CNBC about not having more exposure to Bitcoin. "I wake up at 3 a.m. asking myself why I haven't invested more," he admitted, acknowledging Bitcoin's exponential growth and its potential to reach a $4 to $5 trillion market cap. Lafont's candor underscores a growing awareness among the ultra-wealthy. Bitcoin isn't just a speculative asset, it's becoming a core component of the future financial system. Many high-net-worth investors now realize that delaying exposure could mean missing out on a pivotal shift, akin to the early days of the internet boom. Valuation, potential, and macro trends. So, what fuels this rising enthusiasm? Several factors are converging. Market cap growth. Bitcoin's valuation has soared to over $2 trillion, and with analysts suggesting it could double or triple as institutional acceptance deepens. Store of value and inflation. Hedge. In a world grappling with inflation, currency devaluation, and economic uncertainty, Bitcoin is increasingly seen as digital gold, a safe haven asset. Institutional demand, major firms, hedge funds, and even pension funds are quietly accumulating Bitcoin, signaling credibility and long-term conviction. Supply dynamics. The current price range, hovering just above $100,000, is partly due to large holders, often called whales or OGs, transferring coins to new, long-term investors, creating a generational transfer. As these seasoned whales gradually trim their holdings, new demand is poised to push prices higher. The supply shift, generational transfer of coins. One of the most compelling dynamics in Bitcoin's current landscape is the ongoing transfer of supply from long-standing holders to a newer generation of investors. Bitcoin's earliest adopters, often called OG whales, accumulated vast holdings during the early years, and many are now slowly selling portions of their stash as they age or seek liquidity. Prominent investor and Bitcoin advocate Michael Saylor describes this as a generational transfer, a gradual handover of coins from the old guard to a new cohort of believers willing to hold long-term. This shift reduces supply-side resistance and signals a phase where Bitcoin's price could accelerate once demand outpaces the dwindling supply held by these legacy whales. The cycles, liquidity, and future catalysts of Bitcoin. Despite its recent period of consolidation, many experts believe that Bitcoin is approaching a significant upward movement, or a bull run. Dr. Jeff Ross, the host of the popular What Bitcoin Did podcast, emphasizes that the current market slowdown isn't primarily due to manipulation or external interference, but is largely driven by a lack of sufficient liquidity and macroeconomic momentum. He points out that these factors are crucial in understanding Bitcoin's recent price stagnation and the potential for future growth. Ross highlights several key factors that could serve as catalysts for the next major rally. First, there is the aspect of global liquidity, measured by M2 money supply, which is gradually increasing. This growth in liquidity provides the necessary fuel for inflation across various assets, including Bitcoin. Second, the overall performance of the U.S. economy remains sluggish at present, but with expected infrastructure spending and monetary easing policies, there is potential for economic acceleration. Finally, as liquidity and economic confidence grow, investors are more likely to leverage their positions, creating a speculative environment that can amplify upward price movements. Ross suggests that when these elements, liquidity, economic growth, and leverage, align and ignite, Bitcoin could experience a rapid blow-off top. This explosive phase might extend into 2026, potentially pushing Bitcoin's price to new all-time highs and reshaping the cryptocurrency landscape. The bigger picture: integration, macro trends, and investor sentiment. The overall narrative is clear. Bitcoin is transitioning from a speculative asset to an integral component of the global financial ecosystem. Institutional acceptance. The transfer of supply from legacy whales and macroeconomic conditions are aligning to create an environment ripe for exponential growth. For the ultra-wealthy, the question isn't whether to buy Bitcoin anymore, it's when and how much. For retail investors, the key is to recognize that we are witnessing a historic transformation, one that could redefine wealth, banking, and asset allocation. A new era begins. Bitcoin's journey from an obscure digital experiment to a mainstream financial asset is accelerating beneath the surface. The recent move by the FHFA to recognize cryptocurrency assets as collateral is more than just a technical milestone. It's a clear signal that mainstream institutions are preparing for a future where Bitcoin is as embedded in everyday finance as traditional assets. The fears of missing out are fueling a quiet but persistent shift among the wealthy, whose concerns about being left behind are driving institutional and individual adoption. As supply transfers from early whales to new investors and macroeconomic conditions improve, Bitcoin could soon emerge from its consolidation phase into a new era of exponential growth. The journey of Bitcoin is just getting started, from an obscure experiment to a mainstream financial force. With institutions beginning to recognize crypto assets as collateral and the wealthy quietly shifting their holdings, we might be on the cusp of a new era of exponential growth. Don't forget to like, subscribe, and hit the bell icon so you don't miss out on the latest updates in the world of crypto. Stay tuned and remember, the future is crypto.